Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to another video on crypto options using DELTAEXCHANGE, and this is part of the crypto assets learning series. And welcome to options selling, options strangle selling, right? And here we go. So this is a repetition. You don't have too much of slides. No, this is a very short video. Most of the things that we said is similar to what we had seen the other one, but in previous video we had seen how to sell the options only on one of those, either put or a call. Here we are talking about selling a put and a call with strikes apart, and we'll see details of that. So before that, why do we need to do that? Today, May 3rd, it's a holiday market. NSE markets and BSE markets are closed, but still the crypto markets, crypto option selling during the DELTAEXCHANGE is still there. Crypto markets are live 24/7. And we're trading an expiry a daily basis, right? You enter the trade and it expires today. You get the time taken benefits today, right? Your risk rewards are better. Imagine leverage can be up to 100%, right? Double-edged sword, but yeah. We had talked about all this. We have enough liquidity. A lot of people are there across the world who are there 24/7, right? So decent liquidity. So all the reasons why we are getting into. So here is intraday strategy that we have. So we need to first see what is exactly a strangle, right? The strangle options, you all know that, if you're traded in options, you know that this is what a strangle is, right? We are doing a strangle for the Bitcoin underlying, right? So the options would be based on the underlying BTC, and we have the strike prices, we have the put side here, and we have the call side strikes here. This is for an example. How do we choose the strike? We'll see that. So we sell, right? We sell and we sell on both sides. We sell call at a strike and we sell puts at a strike, which is further down. So the advantage is, so we'll have a premium for this strike price. When you're selling, we'll get some premiums. And this will eventually, by the end of the day, would decay to zero, and that's what we get. That's what exactly a strangle is all about, if you're not aware, right? So that's what we're doing with underlying BTC. We can, we do the same in NSE, where the underlying would be Nifty 50, right? If you're doing the Bank Nifty, similarly, right? So that's about. Now, what are the rules? Next thing for any strategy is to know the rules. So we are doing intraday, not carrying forward for the next day. We're doing intraday, daily options, BTC. So the first and the foremost thing would be to find a strike. Would be to find the support and the resistance levels. What is the range that we are talking about? Market is likely to move within this range. So what is the range? How much do you think? There are different techniques that you can use to find that when in the stock market. So we use the BTC charts for that. We had seen that earlier. Right? We would look at the daily, the hourly, and the 15 minutes multi-time frame, and we would look at the moving averages. We would look at the super trend. We would look at the parabolic star for the support level. So based on this, you can draw the trend lines. You can have any methods. So you can either wait for these indicators. So I'm not specific here. This is how I trade sometimes, right? So super trend is one which could indicate a trend. So if the super trend is bullish on all the time frames, that means it's definitely going to be bullish. You can have directional trades. But the super trend is kind of bearish, then you can have a short trade. If the super trend is a mixed picture where you have a sideways indication that you get from a combination of the price action, super trend, and moving average, and RSI, which are basically momentum trend and moving averages. Combination of this, you get a feel that if that's what it indicates, then take the trades for non-direction. So this strategy that we're learning is a non-directional strategy, right? It's a non-directional. So we already know that how the strategy would look like. If you go to the simulator, where the options payoff can be seen, where you'll see something similar to this, right? After you are sold, or you can have virtual trading also. We have seen that the previous slides how in DELTAEXCHANGE, where we can go and see the payoff charts, right? So this will be basically looking like this, where we'll be selling the call and selling the put and the call with strikes apart, and then wait for the time decay to happen for that expiry. So basically that's all it is. So so based on that, you find the strikes. So if you're using indicators, you'll have to wait for the indicators to give you the signal that now the trend is likely. So if you're taking non-directional, you don't necessarily have to wait for the signal. Right? If you want a particular level to be breached before you take the trade for the premiums to be balanced, it's good, right? So basically, the options trading it can be based on different methods. You can have a premium based, right? So if I use any premiums that's less than 50, right, and I use it, at the premium that I receive at the 8 AM every day for that day's expiry, and I use it based on a 50 less than value we have seen, and I would make sure that the strikes of the call and the puts are 500 to 1000 points at least away. So that has to match with the support and the resistance levels that I am. So it will be a selling a call and a call and put. So waiting on the signal is discretionary. So there is some element of discretion that comes in here. You need to know this technical charts. If you don't know, go to the playlist and then look at the technical analysis videos and learn that. Right. So you would need to have a view which is most likely to be neutral and range bound. So you should have strikes selected at both sides, and that should be the boundaries that you see the market to play during the day. If it is highly trending, stay away from trade. So that is the selection criteria. Based on all of this, we can so decide the quantity and the position size. Has to be clearly based on your capital size and the amount of risk that you're taking in the leverage. So the excess conditions. After you place the order, the different ways that you can exit is you can either exit both the legs, right? So if you should have stop loss for each of the strikes. As soon as you enter the stop loss, have a 2x or 3x kind of stop loss. So 25 means 725, right? So put 75 as the stop loss for the premium on the both sides, and then you can if one of the stop losses are hit, you can exit both the legs. But I do not normally do that. If one of the head, I trail the profit to the cost on the other leg. That way also you can do. Then you can exit the failing side and then re-enter. Basically roll over. You can, if the call gets stuck, you will buy another call which is further down, further away. Basically, similarly for the put for the down. And basically you have to roll up and roll over. That is another strategy. Keep doing the adjustments. But Bitcoins, I don't find that is more effective. I always either trail the remaining leg or exit both the legs on hitting the stop losses, right? And if I decide that profit is enough for me, I trail and book. I losing my direction of the market view. I always trail the stop loss. So right now what you see is 2 legs, 39,000 and 38,000. So 1,000 point range triangle is what you see here. Right. So I took the leverage of almost 100%. Less a capital put in here is for demo, and now we can see that at 27 and it's less than 50, 25, and its expiry is for 03 and 05. That's May 3rd, today's expiry, with 27 points. Now it has become 11 points. So decay has happened. Half day is still left. It's only 12 o'clock. 25 has come to 5. So I have put a trade stop loss for both. 70 lobs 3 times almost. I trade little bit. I also use parabolic SAR and then drop return here also on the option charts. So I trade little bit. So you can I put the stop loss somewhere around. So that's how it works. So right. So or 5 USDT or for 6 USDT is what I have made. So this is exactly a strangle. You see this in the payoff chart. It would look similar like this, right? 2 strikes. Certain and the premiums decay and you get the benefit. So that's an option strangle strategy that you are getting. So how you exit, right? Do we adjust or trail the remaining leg or exit both legs on stop loss? That's the thing that you have to decide. You have to play around with that. So basically I exit based on the first 2 conditions. An entry can be based on the support resistance that you find, plus the points has to be at least this much of distance apart. Also stop loss this support has to match with the support resistance that we have seen, and it has premium has less than certain, and it has to be at a time at 8 AM daily, because only then you will have enough premium enough liquidity and all that would be possible only if you enter early. Otherwise you will not get the risk reward mode, may not be good enough. And portion sizing, leveraging, you have to use carefully. Total capital, don't invest more than 1% into crypto. And within the intraday portion sizing also, depending on the confidence that you get from support and resistances, increase or decrease your portion size accordingly. That's a strategy of the strangles that can be used for selling the crypto options, intraday options, right? So I hope this helps, and if you have any questions, comments, you can please comment on that, and then I can try to help. Yeah, subscribe to channels and share to your friends. It helps us a lot. Thanks for watching. Happy trading, happy learning.